Welcome, this is David Powell. I am with AICAUS, and this is our AICAUS technical webinar series, which we started earlier this year. And tonight's module is on artificial intelligence and audit. And I'm very pleased to be joined this evening by Scott Galen, Director from Mindbridge. Scott has been in the software business for many, many years and has held several executive roles with IBM, as well as working with Clarity based up in Toronto. And he also lives in the Boston area. I am also in Boston, and I stepped down as president of AICAUS earlier this year, and I'm now leading on what we're doing for education and technology. I've been active with AICAUS for about 15 years. And our final member this evening is Chris Easton. Chris is the new AICAUS Vice President, and he's also CEO of Applied Logic. There's plenty of other details on the screen. You can read them at your leisure. So this is a link back to our last presentation where we talked about what is the future of auditing. It was one slide in a presentation on the whole impact of disruptive technology on the future of our accounting profession. And you can actually access that presentation from our AICAUS website at www.aicaus.org. And the points we made is that audits still need to be done. Auditors need to remain trusted advisors. But the key things, and I'll focus on the blue items on this slide, we need more sophisticated tools. We've got a much bigger impact of technology. We're getting deeper insights, looking at areas where risk is highlighted, and we're providing analysis and assessment of performance so that overall we can improve and maybe even move audit from the cost side of doing business to adding business value. So one of the ways we can do that, and hence our focus on future skills, is looking at how artificial intelligence can help augment our auditing techniques for the future. So with that, Scott, I will pass to you.
Thank you, David. So the hype around big data is off the charts, but so are the numbers. 2.5 quintillion bytes of data created every day. I don't know about you, but I can barely count that high. Or how about the trend where data is doubling every 18 months? It's easy to understand why the analysts refer to this area as the new oil, because we have vast reservoirs of information, and if we can harness that information for new insights, for new processes, for new ways of approaching the business, we can have a radical change on how we do things. The value of big data and machine learning is somewhat counterintuitive because it's really about less. So if you think of the struggles we face today, which is the bottom chart, it's the piece under the water. We have a dedicated infrastructure. We're trying to make sense of all this data by using traditional means such as random sampling or rules-based analytics, where I have to understand ahead of time how someone might be trying to get around our process or trying to commit fraud, for example. And that's why you can see the Association of Certified Fraud Examiners estimates we find less than 10% of the fraud or errors that are going on because we can't get our handle around all this data. So if you can see almost the top of the iceberg, the after part, if I can leverage infrastructure on demand or cloud, and I can combine big data with machine learning, I can boil all that down to a smaller subset of what we focus on. In essence, making us more effective because we're focusing on a smaller set of data or area. And it's not just technologists that are talking about this. You can see that almost 70% of CEOs believe data and analytics combined will generate the greatest return for shareholders. And there's a quote from Bank of America, as an example, talking about the application across all the different parts of the business, right? The need for analytics will drive change. And it's change across all different industries. So if you think about insurance, it's not just the ability to detect individual policies, but in aggregation, if I can reduce the risk, I can make insurance affordable for more groups of people. The same is about powering legal with AI in a combination, right? So if I could get an offload from a paralegal or a lawyer and leverage AI to do some of that background work, I can make legal services more affordable to more people. Or if you think about the challenge with physicians in healthcare, specifically on oncology, It's the ability to take a massive amount of data that's constantly changing and boil it down so the specialists can focus in the right areas. And as we face this disruption, you can see that traditionally on the right side of the chart, there's been three patterns. The first group is the group that embraces it, that says, how do I change my process to best leverage this wave and do things in a different way, right? They're generating more value. The middle grouping, in essence, keeps the process, adopts some of the technology, and kind of just goes along and stays status quo. And then there's the third grouping, and in some sense, the people who are going to resist change for whatever reason and are going to grapple and try to catch up afterwards. And that's true across all industries, and you can see specifically from a survey done by PwC, it's definitely true for internal auditing, where you could see a small subset are going to lead here, and then you're going to have the second tranche and the third tranche after that. Yet at the same time, we know, right, if we ask 2/3 of internal auditors, not improving technology adoption is a tremendous risk for all. So when I talk about machine learning, what I like to think about, it's the sophistication of the algorithms, right? So if I think about a chess program that I might individually write based on my knowledge of chess, I'm going to plot the movement as the pieces go around the board just based on one instance of my knowledge. But imagine if I had the capability to take all chess matches ever played and put all that information into one program. That's machine learning. It's the ability to learn from a wide set of circumstances, and then for each movement through the process to give us the best next choice. So an example, if we look at auditing, is this is a service business. It amortizes each transaction that comes in to deferred revenue and takes a small piece in the current period. If I did a more simplistic approach, I could try to understand this anomaly by looking at it just by the dollar amount. And that's the left graph on the left side. I can see the plot diagram there, and it's really hard to spot the error. But if I look at the right side, which is a more sophisticated way of analyzing the data, in this case, I've actually gone through each and every transaction, and I've looked at how the data flows from the debit and the credit back to the debit. And by understanding the flow of the data, I can see an anomaly in this particular revenue account where something was different than any other transaction. And so if I look at the right side, it's easy to spot the anomaly. And so this is a great example of machine learning, which talks to just a deeper, more sophisticated way of analyzing the data. And it's not just the individual transactions, because getting back to giving us headlights into the data, we want to group that information so it makes sense to us. So I kind of talk about another seat at the table, right? As an internal auditor, we know our knowledge of the industry, the particular division, maybe even the individuals who we've been working with. What machine learning brings is another seat at the table, some level of expertise purely based on analyzing the data to tell us as we go in what accounts we might want to look at, what periods of time will be most of interest to us. And therefore we can be more effective and provide more value, more consultative helping to the teams we're working with, because we have these headlights into what's going on. So what is Mindbridge AI Auditor? First of all, we're a Canadian software company. We've built a platform for financial professionals specifically focused on the audit and assurance area. We take every transaction and we score it, and we score it from multiple perspectives. We call this Ensemble AI, and you could see we use business rules and domain expertise, machine learning and statistical methods. Fundamentally, we uncover irregularities and anomalies. Our goal is to enhance the professional judgment using AI, so we score all this information and regroup it to help you and make you more effective as an auditor. And with that, I'm going to start a demo. So as I talked about in the presentation, machine learning helps big feel small. And if we look at this dashboard here, it is built by analyzing all the journal entries, because journal entries are the building blocks of all our financial information. And here I can examine this from 10,000 feet and see overall what are my high risk, medium risk, or low risk areas. As an example, I might want to jump right into my high risk areas. I see this listing here and I can dig into any particular entry. As an example here, we could see this is a bonus paid by the board. I can scroll down and see why it was scored a particular entry here. You can see whether it was a binary decision or a machine learning decision. If it was machine learning, for example, I can go in and understand this was an unusual amount. It had a very high score, and there were about 17 transactions representing less than 1% of the ledger that were similar. So in this case, I know about the bonus, but I'd also probably want to follow up to just ensure the appropriate process was followed, because as part of approving a bonus, we have a separate procedure to ensure market competitiveness and the appropriate approval cycle. So I'm going to create a task, and I'm just going to assign it to myself: review process documentation for bonus. And I'm just going to assign it to myself. Just go in. And the date, I can pick a date. Let's assume a week from now. And I'm just going to create a task. I can go back, and this was a particular entry that I jumped into right by looking at high, medium, or low risk. But I can also look at our risk by time. So here, this is the particular time period that I'm examining. As an example, I might want to scroll out low, just focusing on the medium and high. Again, the goal here to 10,000 foot is to leverage the machine learning to help me get insight into the data so I spend my time more effectively and deliver greater value in what I'm doing. So here I can see, not surprisingly, we go to the end of the year, we tend to have lots of transactions. These are the high risk and medium risk areas, and I can choose to jump into any of these at this particular time and just click in and see what's going on here. If I go back to the analysis, I can also see it by particular accounts if that's what's of interest to me. So here I can see my asset classes of accounts, assets or current assets seem to be all green. But not surprising, on the expense side, I might have more issues that I want to jump into and again investigate and spend more time there. I can also look at a particular area that's of interest to me, a rule or a control point, and that's the right side here. So I might be interested in, for instance, reversals, not specifically looking at was the reversal incorrect or not correct in itself, but understanding the opposite side of the transaction to understand was the appropriate process followed. If we're reversing the order, was it because the customer didn't have appropriate credit? Did we have the right documentation that we needed ahead of time? So here I can see the opposite transaction that caused the reversal and then pick those, for instance, to follow up on later to ensure we were following the processes we were supposed to. So the dashboard allows me to see things at a very high level. At the same time, it's important to dig into any individual transaction. And to help us manage the data, I can go through this faceted search and, for instance, pick a particular sub-account, whether it's liabilities or the equities accounts. I can easily pick on, for instance, revenue accounts and just pick as an example, let's look at revenue transactions. I could pick particular dates, or I might say, let me look at certain dollar values, and I could scroll this around and change it to everything over, for instance, $100,000. I can manage the data to make it more controllable for me to look for the patterns that I want to focus on based on the risk scoring and the areas of the business I want to investigate. I can also do this by typing in specific commands. So I could, if I want, for instance, say, show me all the risky transactions that fit a particular criteria. So it helps me to work with the data. If the faceted search isn't sophisticated enough, I could get very granular in what I'm looking for by typing in a command and then altering whether I started with medium, and moving to low to high or changing the dollar amount. So these are all examples of how I can work with the data, starting off with the dashboard at a high level view. Again, the 10,000-foot view of where I might want to focus, where we're seeing consistent sets of anomalies in the business. That might mean we're not having the proper sets of controls or people aren't aware of those controls, down to looking for particular individual items or transactions that are anomalies. If I've marked any particular item, that's in the audit plan. And so far you see I marked one item and it's showing that to me. And if I have a team, I can see who's been assigned particular items, when they were created, or which particular division we're working on. So the goal for today isn't necessarily to walk through the software in enormous detail. It's to point out the power of AI and machine learning and how it can help us change our approach to internal auditing to allow us to be more effective and to deliver greater value to the business. So I hope you've seen that, and now I'm going to turn it over to Chris.
Hey, thanks, Scott. I've got a couple of questions from the audience. Do you specialize in any specific industries, or is this more of a generic tool that fit anybody's?
Sure. So I would say it's more generic, and it has to do with the business itself and the volume of transactions in the business. If you think about machine learning, it learns based on seeing information. So if I was, working at a small not-for-profit, there would be less value in the software. If I'm working at a giant retailer where we have thousands or millions of transactions, or a bank, something that has lots of data, there's going to be more value. So it's a little bit less about the industry and more about the volume of data that we're trying to manage and get insight from.
Okay. And just a question about the data, just as a follow-on. How easy is it to get the data into your platform?
So we have a drag and drop capability, and if I look at internal audit, we're consistently pulling in the same type of data. So the first time you set it up, it is takes some time. We need your chart of accounts. We need to understand how your data is organized, but you would simply pull in that file into our software, and it would build the model based on that particular file. We have some intelligence built in, but often we need to work with you to understand how that account is laid out. The good part is once it's done, we store that information, and that is used again and again as you pull the information in.
Okay. And where do most of clients pilot, and how long is the average pilot for your product?
Sure. So we're a little bit different than some other companies that have AI and machine learning platforms. To their credit, the benefit of their platforms is they're used for areas outside of finance. So they could be used in healthcare or legal, some of the examples I gave before. Our platform is specifically tuned for auditing. So there is no training of the data. There's no services up front to make the software work on your specific data. So we suggest piloting it on particularly taking a specific division or a particular time period, and we have the capability to jump right in because we can ingest your data and there's no training. So we try to work with you on some type of A/B testing so you can see the benefits and how you'd be more effective and seeing where you want to focus, as I showed you on that dashboard, and pick one particular area or one particular time period, and then go from there to expand based on that footprint and the success.
How do your clients justify the investment? On what basis do they do that?
So there's a couple different areas that we look at. So the first is just risk reduction. If you saw, in the charts, we talked about that we're only touching less than 10% of the errors that we know of, right? And that's because we can't get our hands around the data. So by using machine learning in our platform, we help reduce the risk overall. And that risk is of value, and that risk is worth something. The second thing that I like to talk about is that balance between efficiency and effectiveness, right? Efficiency, in some sense, has to do with time savings. And so having all this information in one platform that can easily be shared by a team, specifically if that team is not in the same office and you're working in different time zones, to have all that information stored in a central secured location, the ability to understand who's got open items, having all the data easy to go in and look at particular entries, right? That saves us time. So there's an amount of time that we win back by using the platform. And then lastly, it's about effectiveness, right? If I can add higher value, if I can spend more time being consultative, working with the other teams, that gets back to, in essence, the purpose of internal audit. Yes, it's to protect, but it's also to help people understand how they should be operating their business so we're more effective as a company. And so that's the third area that we help with. That one's a little harder to put a number on, but I would say the feedback we get from our clients is that is a big part of why they move forward with us. Their team is just moving to the next level and being effective in consultative working with their customers internally within the business.
This sounds almost too easy. So what have been the major barriers to adoption?
Sure. So one is the ability to embrace and do something different, right? So as I talked about and you saw the charts, less than 20% are willing to start out and be different. So first is an open mind and wanting to do something different. The second piece is having a really good game plan, agreeing up front what we're trying to accomplish. The question before that you asked, what's the ROI? That leads back to a good game plan, being really, really concrete about what we're trying to accomplish and ensuring we stay focused on that. And I think between those two areas, that's the best way to get started. And those avoid some of the hurdles of what I call kind of scope creep. Often, we come in, people see the software, they really enjoy that dashboard view as well as the detailed view, and it becomes, well, can you also do, can you also do, can you also do? And I call that scope creep, right? So staying up front, understanding what we're trying to accomplish sets that point right where we want to get started. And then once we have a success, we can move from there.
Great. I have a couple of more technical questions here. How is the risk score calculated?
Sure. So we examine each transaction. We examine it from a perspective of about 25 different, we call them control points. You could think of them as views or rules. Each one of those individual rules has a particular risk score. We, in essence, have a formula that combines those risk scores for any particular entry, and that is the cumulative risk score for a entry. We then also have the ability to pull that data, as you saw from the dashboard, so you can see the grouping of that data, and we show you that in different colors like red, green, and yellow. We show it by the chart of accounts. So you can see it from a pattern and a color and not necessarily just an individual risk score.
So as a follow-on, you get all of this out of the box. There's no training required or no configuration really required around the risk scores. It's straight out of the box.
Correct.
Okay.
The risk scores are already tuned for auditing. The machine learning has already been tuned for auditing. You can certainly turn off any one of those control points. There are businesses, for instance, that do an excessive amount of weekend transactions, and that might not be an indicator of risk. So we have little control bars where you could turn off any specific rule. But all that's done up front because we only focus on auditing and assurance.
Can the software test or validate procedures, or is it just looking at your transactions?
No, so the way we help on the procedures part is by showing areas of risk. So as an example, the one I went through there on the board approving a bonus, right? So we don't know whether or not the appropriate process was followed, but we can show you in essence an area of risk, and then you can see if that process was followed. But we're really about risk identification. And then the second step from the risk identification, if you see sets of transactions or a high risk transaction, is to see was it an anomaly, and then were the appropriate processes followed. But we don't specifically understand if the process was followed.
Jumping back up to a slightly higher level, what is the reaction from external auditors?
So we've been on a little bit of a rocket ride with the external audit community since we brought this to market about 16 months ago. So we have about 125 or so external auditing clients, somewhere around that number, and the uptake's been great. They are trying to understand how to leverage this technology for the same reason. How do they be more effective in helping on the external audit side? And we see that as a great pairing with the internal audit side, because if we're all looking at the same data, right, we all see that same risk score, we can more effectively work together and understand areas of control and the appropriate processes. But so far on the external audit side, it's really been a rocket ship.
So will AI eventually replace the auditor?
It's tough for me to see the future, but in my opinion, no. I mean, if I look at all the examples and I look at where we're focused, it's really about enhancing the judgment. Right? And again, it's about, we have all this information today and we're struggling for insight. And so by leveraging machine learning, it's not about replacing any individual. I talk about another seat at the table, right? It's about bringing another perspective that understands the data and can give us insight into that data. But it can only go so far. And so there's other areas of skill that are needed. And so this is really about enhancing the judgment of an individual, right? Making our jobs not even easier in some sense, but making us more effective, because someone has in essence boiled the ocean and allowed us to see the important parts that we need to see to do our job effectively.
I think I just heard a big sigh from the audience here. Sigh of relief. That's all the questions I have from the audience. I'll hand it back to you, David.
Thank you, Chris. I appreciate that. And I've got a question for you, Chris, having listened to you asking those questions to Scott, and thank you, Scott, for your answers. Chris, you've been an internal auditor, you've been an external auditor, and you have auditors now auditing your company, right? When you see something like you've seen now from MindBridge, what are your thoughts about it and how it can influence the way that we're used to doing things from audit in the past?
What I like about the product is traditional audit is more of a sample-based procedure, and this almost allows you to do 100% sample, raise the high risk items up so you can really focus your time down on that. And I like the pre-programmed learning on the AI, which is one of the harder parts of AI. So, you know, a lot of that has been pre-canned, but I see it as a huge productivity tool to really allow you to focus on the critical items and to give a better opinion, or to identify in terms of internal audit those areas of risk of loss to the company. I'm sure Scott has plans to enhance this, and maybe that's a question we'll hand back, Scott. You know, where do you see this product going? You've been in market for a year, but obviously there's huge potential here.
Yeah, so the good part is if you think about the journal entries, I almost use the term the DNA, right? They are the building blocks of all our financial information. So at the moment, we focus on the base ledger as well as accounts payable and accounts receivable. And every time we move into a subledger, you get to more and more files, because, for instance, you're going to have your vendor file, you're going to have your approval file, you're going to have a couple files that make up AP as an example. So we're aggressively trying to bring in more and more data so we can give you a more holistic view of the organization. The other area we're doing is around cross-correlation. So can we pull all the data together and start to give you feedback either on an industry example? So what's happening, what ratios do we see, what patterns do we see relative to a particular industry? Or can we pull back the data in an anonymous way and give you comparisons on other transactions? So are other groupings seeing problems in specific areas, and how is the risk scoring we're seeing for this particular company in this particular instance comparing to other groups? Obviously, there's privacy involved in that. Some people may want to opt out, but we see the ability to combine the group, right, the larger organizations, and share some of this information in an anonymous way to give ourselves benchmarks and different areas of our business to compare against. So those are some of the areas that we're working on to expand the platform past where it is today.
That sounds great. I look forward to seeing the product progress. Thank you, Scott.
I'll chime in again. Thanks, Chris. Thanks, Scott. That was good. It'll be good to see where this develops. I think we'll probably have a need to revisit this at some point in the future. We will have a next webinar coming up, hopefully next month. We're planning one on blockchain. So this will be a continuing series about technology and the impact on the accounting profession. So with that, Chris, I thank you. Scott, I thank you. And hope to get feedback from our audience on what they liked and didn't like. Please let the comments come through to us at executive director@acourse.org. Thank you so much.